Well, good morning, everyone, or good afternoon, or good evening. Depends on what time you see this. It's morning for me. Anyway, it is Saturday, December the 4th in the year 2021. The year is winding down. Hopefully, it's fine, doing well. I'm still on my daily cup of green tea. So, have you noticed, I try to make one video a day. Oh, sorry about yesterday. I was going to make a video yesterday, but we got busy with a variety of different things. I had stuff I do for my triplex I'm selling. I'm not the most organized person. You kind of see this paperwork back there. I got a file cabinet over there. I got a desk over there. And I got stuff everywhere. Anyway, I had to get stuff for my triplex I'm selling. I had to provide information to the bank. We also went to a local place where we saw a bunch of manatees. It's that time of year, it's wintertime. So manatees are starting to gravitate out of the Gulf, I guess, into the more shallow waters of inlets that they can get to where the water's still warmer, I guess, to feed and whatnot. So anyway, I digress. So what I want to talk about today is everyday decisions that we make. Because that's the thing with investing, because as you know, this channel is about life and it's about investing. Okay, and when it comes down to it, I've lived 50 some years. I've met a lot of different people. I've read a lot. I've read blogs, books, magazines, websites, etc., etc., etc. And it seems like over the decades, it's always been a small segment of the population that truly invest. And you'll hear stories periodically about a janitor who just passed away and they're worth X number of millions of dollars. Or a secretary that passed away who's worth X number of millions of dollars. And the point of the stories were always like, these were just folks working sort of low-paying jobs that kept plugging away day by day, week after week, month after month. And by the time they died, they had amassed a small fortune, several $1 million. And this is, going back in time a decade or two or three when this sort of thing, I'd hear about it. Okay? But when it comes down to it, you can look at two different people that work the same job, make the same paycheck, work for the same company. And if they both stay there, which nowadays people will jump ship and go to a different job. But say if they both stay there, one person may retire and be living on bare bones retirement, and the other one has amassed $1 million, $2 million portfolio just from participating in their 401k or whatnot. And what it really comes down to, people sometimes, I've heard comments, oh, they're lucky. Oh, they're, whatever, there's comments. But it comes down to all of us can do this, for the most part, not 100% of us, but the majority of us can do the exact same thing. It comes down to our daily conscious decisions. I've talked on this kind of stuff before, I think. But every single day, the decisions we make impact our future. Okay? And when it comes to finances, every dollar you put away today can compound to become a larger dollar tomorrow. Okay? And when you get down to the nitty-gritty of things, over the years, investments have been mutual funds, they've been index funds, they've been ETFs, they've been individual stocks. Crypto is a big one right now. Real estate's a big one. Then you got other stuff also. There's always there's investments, okay? I've said this in videos before. It seems like in modern times, right now, the hype over a lot of stuff reminds me of 1999, just the late 90s. Because in the late 90s, the hype was there. The economy had been roaring. The hype was there. We didn't have a pandemic like we just had, but the economy was sort of booming. The markets were up. The internet, I got my first computer in 1995. Windows, if you're my age, you might remember Windows 95. To me, it was advertised everywhere, and that sucked me into getting my first computer and getting online. Not America Online. I had a dial-up service. I was living in Maine when I got it. And we have a picture of our son, who was just 2 or 3 years old at the time, falling asleep with his face on the keyboard of the big monitor. I remember that computer cost me like $2,500. And my wife and I, we talked about it and said, we're getting our first computer. We're in our mid-20s. Our son is basically born into the computer world. Okay, fast forward to now, kids are born nowadays, they're born into the virtual reality world, I guess you say. But anyway, what it comes down to is just the daily decisions we make in everything, but particularly in investing with finances. If we just get started with something, if we work a job and if all we do is put money in our 401k, that's all we do, that's better than doing nothing. Okay? Now, granted, if that's all a person does, they're not going to get wealthy. Well, unless they make a big paycheck and put a lot in there, but odds are they're not going to get wealthy. But they're going to have something. When they get to retirement age, whatever that age is for them, they will have something above and beyond the pittance of Social Security that they may get or something else they may get. They'll have something additional, which is better than nothing. Okay? But now, if someone can take it just a step further, just one step further, and yes, maybe they do the 401k, but they also do something different. Maybe they do individual stocks, maybe they do crypto, maybe they do real estate. Okay? Because those are the three big ones that people can do. Just the stock market as a whole, mutual funds, index funds, individual stocks, crypto, and real estate. Those are the three ones. What happens is people dabble, they gamble, they speculate in all the markets, more so in crypto and in stocks. They get caught up in the hype. They buy the latest and greatest. They buy the Dogecoin. They buy I always forget the other one. They buy if you look at crypto, there's so many, every day there's crypto. There's different currencies coming about. It reminds me of 1999 with all these internet stocks. Every day, maybe not literally, but it's like every day there's the new pets.com, this, travel.com, whatever it might be, or something new, okay? A lot of those companies from back in 1999 did not make it. They did not survive. As investments, they crashed and burned. They did not survive. The cryptos of today, a lot of them aren't going to make it. They're going to, some will crash and burn. I don't know which ones exactly. And there's big names out there now, Bitcoin, Ethereum, and some others. Those are the big dogs. That doesn't mean they're going to be the big dogs in the future. We just don't know. The point is, though, if we're not gamblers and speculators, if we get the mindset to become investors, if we want to choose crypto as our field of investment, I don't recommend this. I don't recommend any particular field. Because remember, I'm not a CPA, I'm not a financial advisor, I'm not an attorney. I don't recommend this. But if someone truly wanted to make crypto their field of investing, yes, they could probably study it, learn it, put money into Olympus Dow, put money into Bitcoin, put money into Strong Block Node, and something in there is going to be a grand slam for them. Maybe not everything, something might crash and burn, but if something takes off, it drives it home for them. They do good. Same way with stocks. Back in the 2000s, I'll make an example from my own life. I was putting money into different stocks. I put money into Netflix. I liked my Netflix investment in 2005. I watched that investment and it just flatlined 2006, 2007, 2008, 2009. I didn't make a whole lot of money, but I just held on to that small investment. And then it started taking off and it started growing. And I capitalized on it. I didn't get wealthy. I didn't get rich, but I cashed it out and I renovated the basement in my house. Okay? But the point is, you got to get started in something. Same with real estate. Real estate is the one, though, and I've said this before. If someone gets started in real estate and they do it intelligently, they buy their first house, they have positive cash flow, and they get a second, they get a third, they get a fourth, they get a fifth. I think, in my humble opinion, they will be the most successful. Okay, for the average Joe, the average Jane, average Joe, average Jane. If they get into real estate, I think they will be the most successful. But in one way, they will have the most stress of any of these fields. In one way. In another way, they will have the least stress because the stock investors and the crypto investors will experience stomach-turning roller coaster style drops in the market. Like even right now, Bitcoin has dropped from a high of 69 down into, I think it touched into the 40s. I believe it might be in the 50s right now, thousands. It was 69,000. It dropped into the 40s, somewhere in the 40,000s. And I think now it might be 55,000. Don't hold me to that. they fluctuate so much, you know. So crypto and stocks can do that. All these successful stocks, I follow stocks for 30 plus years. All these successful stocks have had, for the most part, have had big drops along the way, 20%, 50%, but yet they come back and they keep on going. Not every company comes back and keeps on going. Some of them drop and stay down there. And they might linger along for 20, 30, 40, 50 years without ever taking off. So you got to find the companies that will take off. Same with crypto. You can't just put a little bit of money into Dogecoin or a little bit in Bitcoin or a little bit in Ethereum and say, we'll see what it does. Look, I put 2,000 in, now it's 1,000. I'll take my money out. Okay, that's quitting. You got to make your conscious decision, your choice of investment, whatever that is, because I'm not pushing you towards any of these investments. If it's stocks, learn how to invest in stocks. If it's real estate, learn how to run your numbers and to buy good rental properties. If it's crypto, learn how to evaluate these cryptocurrencies, and not just the Dogecoin has a cool name or Bitcoin has a cool name. Read what they are doing. Read their mission statement, as I call it. Read what their project they're doing. And if you believe in it, if you think they can be successful, maybe you can give them some of your hard-earned dollars to get a positive return. Same with everything else. Same with oil drilling. Same with mineral rights. Same with wine. Same with other commodities. Same with art. Everything. If whatever choice you make, study it. Don't just blindly give your money to your 401k custodian, not watch what's happening, and then wake up when you're 65 and be like, I got $250,000. That's what someone makes working full-time for a year. That's a year's salary, because we're talking about the future. And they're like 65 and they say, well, I can never retire. I got to keep working forever and ever. All right. The goal of my channel is to help you out by providing and sharing stories with you and trying to give you something to think about. And just think about the decisions you make every day. From drinking a cup of green tea. I started drinking a cup of green tea 20 plus years ago because I had a friend of mine who worked in vet studies. They tested stuff on animals in Tennessee, I think it was. And one of their studies, they were injecting high concentrations of green tea, the green tea molecule, into, I think it was rats or pigs, whatever it was, that they had intentionally gave cancer to. Cancer was growing and they injected it in. A high dose of green tea, this is going back 25 years ago, a high dose, concentrated, given into the, however it was given, injected or whatever, however it was given, it was shrinking the tumor. My way of thinking was, and this high dose might have been like drinking 5 cups of green tea a day, which no one's going to do. My way of thinking is, well, if I incorporate a single cup of green tea into my lifestyle, my daily life, I did it as a cop when I was working shift work. I would stand inside 7-Eleven sometimes, get a cup of hot water, pull my tea bag out of my pocket, and make a cup of green tea. I've drank green tea for 20 plus years now. Maybe it'll kill me. Maybe it'll help me to live a long life. I don't know. But it's the conscious decisions, the little bit of walking I do now, the swimming I do now, the exercise I do now. I've been doing this stuff all my life. I used to be a runner. My knees started giving me issues. I was always a poor swimmer, so I learned how to swim. It's just the conscious decisions that we do. The things we do today, we make it a habit by repeating it and doing it tomorrow and the next day. I did yoga the other day, and I might try to do yoga today or do it tomorrow and do it 3-4 times a week to make it a habit, to make it a regular routine. All right. Same with investing. You put, however you do it, you take it out of your paycheck. You can pay once a week, every 2 weeks, once a month. You just get started and you keep it going. You keep it going. All right. Repetition. And just keep it going. All right. And one day you're going to wake up and you're like, wow, where did this gray hair come from? Oh, look, finally, my investments are paying off. Okay. Some of you will get there faster. Some of you might be 30 and you're like, wow, look at this. Mazske said I could be financially independent in 10 years. I started when I'm 20. Now I'm 30 and boom, I'm financially independent. Some of you might take a little longer, but you'll get there. Okay. The point is you just got to get started. All right, so it comes back to the daily decisions that we make. Okay? So make good decisions. Stay safe. Keep smiling. Keep loving life. Mazke's signing out.